What's going on, guys? Welcome to the February 2020 Corelogics chart pack review. So I did the first one and it was pretty well received in January this year, so thought I'm going to continue it on for the rest of the year, just review the chart pack, go through my thoughts and my processes and what I think is going on in the market. Obviously I don't have a crystal ball and I don't know what's going forward, but all we can do is sort of look back and see what's happening from the reflection of the data. Obviously it's a bit slow period between December, January and the start of February for the housing market because everyone's still away on holidays, but hopefully we'll start to see some new data come through and see what's really going on out there. I'm reporting to you today, well, recording for you today at the Girl Cave, so hence the pink chair in the background. But this is my wife runs a styling business and this is her office. It's currently 6:30 in the morning and everyone's fast asleep at my house, so thought I'd just come in here and record here for the day, make it a little bit easier, get it done. Got a couple of open homes to go to at 9 o'clock, so smash it out and get it across to you guys. So anyway, let's get into it. So February 2020 chart pack review. Not a lot really changed from last year. The residential real estate at $7 trillion. Still most dominant and significant real estate is in the industry, as you can see by this chart here. Not a lot of changes down the bottom here. I mean, obviously the numbers have changed a little bit, but if you want a bit of an explanation about what these numbers actually mean, go and just watch the start of the last video and I'll go into explanation there of what that actually means for the Australian market. National dwelling values increased 3.7% over the quarter, a slower quarterly rate than the other 3 months to December. Yeah, so as we said last month, this sort of tapering off here for the combined capitals is quite interesting, and what that might indicate is obviously just the slower December-January period. Obviously, as I said, everyone's away on holidays, everyone's doing their own thing, people aren't really active in the property market, they're not buying and selling and all that sort of stuff, and clearance rates aren't getting, auctions aren't being held, so clearance rates aren't getting reported. So we sort of tend to see this slowdown anyway. It's going to be interesting what we see from February, March, because that's really when the market is quite hot. It's actually probably the hottest period of the year, February, March. So going to be interesting to see what happens from that. But yeah, as we can see, it's kind of slowed down now. It's not as aggressive as a bounce back that it was. So it's going to be interesting to see what happens. Maybe the February March season will kick this back off. But yeah, I'd hate to see a sort of a collapse like we have from these sort of bigger points and go back down again. But yeah, who knows what's going to happen. We saw on Tuesday, or yeah, the first Tuesday, of every month, the RBA didn't release another cash rate drop, so interest rates remain same. Some economics, I can't say that word, economicists, honestly I can't say it, I don't know, like economics, but I don't know. Yeah, they're predicting like sort of April for the next rate cut, but we'll see what happens. I don't know, you never know, no one knows what's going to happen in the future. So yeah, should be an interesting time, but as you can see, we're actually starting to see it in the rest of state too. It's sort of starting to taper off a little bit, and this might be an example of, trying to match that trend for the combined capital. So yeah, we'll see what happens, but slowing down a little bit. Annual growth in national dwelling values was 4.1%, the fastest growth rate in a 12-month period since December 2017, yeah. So we're seeing the same sort of rebound numbers in December 2017, which is kind of this period here. So obviously we've come high, we've come right down, and then yeah, because this is kind of that 12-month rolling period, it's more prolonged compared to the previous view. So the previous view, we'll start to see those little spikes come down and ups and downs, where this is more of a rolling 12-month period. So I haven't really seen this one taper off as yet. But yeah, interesting. So we're back up to that sort of 2017 rise, which is pretty significant. Nationally, the high end of Melbourne market has been the strongest growth segment. Come on, Melbourne. Yeah, so obviously this 75th percentile, 11.5% growth in when? Strongest growth segment since when though? Annual dwelling value growth. Yeah, so it's annual. So it's up 11.5% annually. And if you think about that, like, we really started to see the rise after the election in July. So, really that's even a little bit of decrease and a whole bunch of increase. So that's a significant rise. Followed obviously by Sydney there, the 7th percentile. And, while we see, I explained this last time, but while we see the sort of what the 75th percentile quartile means is that, all the higher end, well-valued properties are increasing faster than, so all the really nice areas in Sydney it'd be like Vaucluse, all those sort of things. In Melbourne it'd be like Brighton and like all the really like near the beaches, just places people want to live. And we see that grow so dramatically because of their price point. And, people actually want to buy really good quality property when they think it's time to buy. So that's why all this great property sort of increases dramatically, because everyone's scared that the market's going to go up drastically again. And so it's like this feeding frenzy to get in there. And they're always the leaders. They always go up first. And then we sort of see that flow on to the rest of the market. So yeah, I mean, maybe that's a sign for the rest of the market to say, follow their trend. So people can get in at the lower end and sort of see that, okay, there's been some significant growth on the upper quartile. Maybe it's going to follow that trend and we can get in there. So Sydney and Melbourne doing really well. Brisbane's still quite lacking. Adelaide, the higher end actually came down. Perth is down significantly, as we all know, below 5% though. That's pretty hectic. Hobart, the lower end's doing very well, nearly 10% growth for the lower end, so very interesting. Darwin's down significantly, and ACT's sort of sitting, growing, probably the third biggest or fourth biggest growth sector. So interesting there. Dwelling values increased in 6 of 8 capital markets in the year to January, with 4 markets reaching a record high value. Yeah, wow. So record high value for 4 markets. So as you can see, annual change in dwelling values, Sydney and Melbourne doing very well there. Adelaide sort of on point of just the 0.4%, so not a lot of movement there. Brisbane's up by 1.1%, and then we see some other really growth sectors in Hobart and ACT here, as we just saw in the previous one. But yeah, not as a stronger growth as we've seen in Sydney and Melbourne, but tracking quite well there. And then we've obviously got some negative growth down here in Perth and Darwin. So if you're a counter-cyclical investor, it might be worth checking out what's going on there. As you can see, it's been, since really 2015, we've been in negative territory for both Perth and Darwin. So look, I don't know anything about the Perth or Darwin markets. I only know Melbourne and Sydney, but yeah, I might even investigate myself, see what's going on there, see what the potential is, see what the other experts say. I'm not an expert myself. I'm just relaying the message of the Corelogics thing. So yeah, maybe not a bad counter-cyclical buy at the moment, but have a look. Quarterly and annual change dwelling values, Sydney. So yeah, as we can see, this big line is the yearly change, and then these little lines are the quarterly change. So we're seeing some little bit of growth here, as we said before, sort of seeing this taper down. This quarterly change is tapering down a little bit now. So as you can see, it sort of goes up and comes down and goes up and comes down. So we've obviously reached the peak of this little growth cycle. So that's very interesting to note. Obviously, as I said, January, December, slow period, we might see something ramp up sort of February, March and up again, but for that little growth peak is sort of tapered off a little bit. Sydney dwelling values increased by 1.1% in January, not a lot of movement in January, so not, how can you, there's not really a clear record there. Dwelling values increased 5.6% in the quarter, so really good quarterly growth. Sydney dwelling values are up 7.9% in the past year, massive growth in the past year. Sydney dwelling values are minus 5.4% below the record high, which was July 2017. So yeah, still a potential for a bit of growth. Below, 5.4% below the high in January 2017 is leaves it for a little bit of growth. So maybe we will start to see it taper off when more fresh data comes from December, January, and then we'll it might go back up again because there's plenty of room to grow from the max. 5.4%. That's pretty significant. So we'll have to see there. Quarterly and annual change for Melbourne, same again, sort of seeing that little decrease. Melbourne dwelling values increased by 1.2% in January. Yep, so a little bit more than Sydney, but not a lot of data. Dwelling values increased 4.9% in the quarter, so not as strong as Sydney's growth, but still pretty strong. Melbourne dwelling values are up 8.2% in the past year. So Sydney was 7.9% in the past year. So it's actually surcharging ahead of Sydney for a yearly growth at 8.2%, which is quite good. Got a couple of Melbourne investments, so I'm happy about that. Melbourne dwelling values are minus 1.2% below the record high. Yeah, so this is another point that I brought up last time. Where Sydney's got 5-6% of growth from their peak left, Melbourne's only got 1.1%. So interesting to watch the Melbourne market. Maybe it will continue to go up and sort of set a new high and follow the Sydney trend. But yeah, obviously there's not a lot of room to grow from that peak. So it's going to be interesting to see when we hit that new peak and what's going to happen. If it continues to go up, it could continue to go up quite significantly. But interesting. Brisbane. Starting to see it taper off a little bit for Brisbane too. Obviously the yearly line started just to go above, but the quarterly is starting to come down now, so we might even see this come back down to that sort of heavy level. Again, could go back up like I've talked about for the rest of them. Brisbane dwelling values increased by 0.5% in January. Dwelling values increased 2% in the quarter, so not as strong a growth as Melbourne and Sydney. Brisbane dwelling values are up 1.1% in the past year, so it's only just starting to grow up a little bit. Brisbane dwelling values are now at a record high. So they're at the record high, which is pretty significant for Brisbane. Brisbane dwelling values are now at a record high. Ever? It's very interesting. I'm actually going to research into that because, interesting for Brisbane. But we'll see what happens there. Adelaide's, sort of just hitting that 0% peak. Adelaide dwelling values increased 0.2% in January. Dwelling values increased 1.3% in the quarter, so a little bit better than Brisbane. Adelaide dwelling values are up by 0.4% in the past year, so not a lot of growth over the whole year, but what can you do? Adelaide dwelling values are now at a record high. So same again, record high. It'd be good to investigate in and just see what's going on there. Perth is starting to see a bit of an upward trend, which is really quite nice. We've got this first quarter of growth here for a long period of time. I don't know what happened sort of December, but January we're sort of seeing that positive growth now. So would have been a good time to buy sort of mid 2019. Very interesting. Perth dwelling values are up 0.1% in January. Great, guys. Dwelling values increased 0.4% in the quarter, so starting to see some growth for the quarter, some positive growth for the quarter, which is nice. Perth dwelling values are down negative 5.7% in the past year, so they're still down for the year. Still a great counter-cyclical buy, but interesting. We're good to see what's going on there. I don't know. Yeah, I have to do some research in what's driving that. Is it the market overall? Is it the Sydney Melbourne market, or is there new jobs being created over there that's making people? Is it more affordable? Yeah, pretty good one to investigate. Anyway, Perth dwelling values are now negative 21.3% below the record high, which was in June 2014. So still 20% of growth to get to the record high again from June 2014. Obviously there's something driving that negative growth. Might be fixed now that it's rectifying again, but as I said, I don't know a whole lot about the Perth market, and it's probably worth investigating what's actually going on over there. Hobart dwelling values increased 0.9% in January, so we're seeing some pretty strong growth again there. That's almost the same as Melbourne and Sydney. Dwelling values increased 3.4% over the quarter. Hobart dwelling values are up by 5% in the past year. 5% in the past year. Nice. Hobart dwelling values are now at a record high level. Yeah, very interesting. So although we've seen some pretty strong growth there, they're already at their record high. So it's going to be interesting to see how this year sort of pushes out for them. Interesting enough, this sort of quarterly change here doesn't seem to be as negative as the previous one, and this yearly annual change is quite strong on that return. We haven't sort of seen a downplay there. So yeah, going to be interesting to see what happens to Hobart this year. Maybe surcharges ahead in this February, March hot time for the market. So it'll be interesting. Darwin dwelling values increased 0.1% in January, pretty stagnant. Dwelling values decreased negative 1.6% in the quarter, so down a little bit in this quarter. Darwin dwelling values are down 8.1% in the past year. Darwin dwelling values are negative 31.8% below the record high, which was May. Wow, so still down 30% from the record high. Obviously, there's something significant driving that. I don't know about the Darwin market. I haven't done a lot of investigation, but yeah, that's I would say, yeah. When I say it's a good counter-cyclical play, like I would only really invest in Sydney, Melbourne, Brisbane myself. I don't know anything about these other markets, so I don't really know what's going on there. But always worth an investigation. But when you sort of when you see that negative 31%, that's pretty risky. Imagine buying a $1 million house and losing 30%. That's $300,000 that you could be potentially losing. So, not everyone wins in property. People actually lose money. Another Corelogics report is the pain and gain report, and that actually tells you how many properties actually sold at a loss for the year. So, it's not a win-win situation. Always investigate in where you're buying and why you're buying. And when you see these sorts of numbers, negative 31%, it's really worth doing a thorough investigation before you actually buy there. ACT values increased 0.3% in January. Dwelling values were up 2% in the quarter, pretty good. Dwelling values were up 3.1% in the past year, so not as big as Sydney as Melbourne, but still pretty strong. The ACT is now at a record high. I really want to know what this record high means. Record high for all time? I don't know. If you guys know, leave it down in the comment section below. Also, if you're loving this content, please make sure you smash that like button. It really helps out with the YouTube algorithm, so I really appreciate it. So, sales activity over the year has trended higher, despite the seasonal weakness through late December and January. Sales activity over the year has trended higher despite the seasonal weakness late December and January. Yeah, exactly. Okay, monthly sales with 6 months moving average. Yeah, so you can see the sort of moving average here. Obviously, the slower season, as they're saying, in January and December there. I think the black line is, yeah, that's national. So you can sort of see it's less of an impact there, less fluctuation than in the individual markets, but big decline here. As I said, going to be interesting to see what happens February, March. But this line is the decade average, so you can sort of see it dance around the decade average, which is quite interesting. Yeah, Sydney and Melbourne leading the charge there. So Sydney's activity is up 17%. Yearly trend, wow, up 17%. That's huge. Melbourne's only nearly 8%, so that's pretty significant. Annual growth in rent values was 1.3% nationally, suggesting growth in rents is seeing increased momentum. Annual change in rent rates. Yeah, so a bit of increase. Oh, wow, that's very interesting, because generally what happens with rent rates compared to, so rent rates compared to the value of a property is they're sort of counter-cyclical. So as property values go up and the rents stay the same because they're on a 12-month contract, rental yield as a percentage starts to come down because they're stagnant, but the price of property keeps going up. So it's interesting that that's coming up because it's obviously following the price. Very interesting. That's quite interesting. That's national though. So as you can see in the stronger market of Sydney, it's down 0.6%, which could mean that Sydney is rising at a faster rate than rents are. But yeah, obviously the rest of the states, apart from Darwin, are seeing big increases. So the biggest driver is Hobart, and let's go back to Hobart. It's 3.4 for the quarter, 5% for the year. So that's even quite strong. With strong rental rates. So obviously rental rates and prices in Hobart are going pretty significantly. Nationally, gross rental yields were steady on the previous month at 3.8%. Due to the rapidly rising dwelling values in Sydney and Melbourne, rent yields remain compressed in these cities. Yeah, okay, so this is exactly what we were just saying. Should go to the next page before I start talking. Gross rental yields national, 3.8%. So at a national level, 3.8%, probably a pretty good benchmark. Sydney and Melbourne are below that, obviously, because prices are quite high. But yeah, looking at good sort of rental yields in the rest of the state, 4.5% for Brisbane, 5.8% for Darwin, pretty strong. And we just saw that in the last graph. So some pretty strong rental yields out there at the moment, apart from Melbourne and Sydney, obviously. Days on market continue to decline, though at a slower rate as demand improves. Yeah, so days on market is just how many days a property sits on the market before it gets sold. And if you think about an auction campaign, it runs for 30 days. So, that sort of 30-day line should be, that's when property markets are really, really hot. Auctions are getting snapped up, private sales are happening, within the first 2, 3, 4 weeks. So that's really, really good that that's starting to come down. So, in a slow period that we just went through 2017 to 2019, days on market was even up, 50, 60 days there. So it was sitting on the market for quite long before being purchased. So yeah, starting, still coming down, but much slowly than we saw, and that might just be the December, January slow period. Median days on market, as we can see for Melbourne, so as we can see, January 2020 compared to 2019, it's now 31 days on market compared to 45 days on market. So we're selling things, 14 days quicker than we used to. Sydney's an even bigger gap, 33 days on market now compared to 57. So it's nearly half. The properties are sitting on the market for less than half the time now in those two bigger markets, which is pretty phenomenal. 6 of the capital city markets have been a sharp reduction in vendor discounting year on year. Yep, so vendor discounting is how much people will discount their properties by to try and sell them. So, I think I said it last time, but vendor discounting and days on market are pretty counter-cyclical. As we see days on market come down because people are buying more regularly, we see vendor discounting come up. So they kind of go in waves, or opposite waves, you know what I mean? Because as properties are getting purchased quite quickly and there's more demand in the market, people aren't discounting their properties as much because they're selling them quicker. So coming up sharply, which is really good to see for sellers, obviously. Same again, Jan 2020 to Jan 2019 is negative for Melbourne, negative 3.5% compared to negative 6.7%. So it's almost half. People are significantly not reducing their thing, which is crazy. Sydney's the same, 7.3. That's more than half. So people are really not discounting their properties anymore. They're holding on to them and trying to sell them off as quickly, or for as much as less discount as they possibly can. The start of February saw a 4-week average clearance rate of 65.4% across the combined capitals, up to 23 points from the same previous year. Yep, so obviously 65.4 is still a little bit strong compared to some of the lower numbers that we saw last year in February, but obviously not a lot of stock on market, not a lot of auctions happening, so it's not a real true indication of where the market's at the moment. But if we compare it back to last year, which is obviously what they're doing here, up 23% points, that's pretty ridiculous. So still strong in that period. Housing demand population growth was 1.5% for the year to June, which sits just below the decade average of 1.6. So yeah, pretty average on the population growth there. Overseas migration has been slowing down a little bit. Natural increase in Australia has been slowing down significantly since 2010. So Come on, millennials, let's make some kids. But yeah, it's pretty average there. Approved housing supply fell by 21.4% in trend terms over the year, led by 31.2% decline in units. Dwellings approved in construction national. So from the peak in 2017, we've sort of seen this decline in approvals happening. Obviously units and houses were at the same point in December 2017 here, and units have taken a significant hit compared to houses. I really want to know how they collect this data because, what sits under a unit? Is it apartments, townhouses, units, all these flats, whatever. There's so many different names for them. Do they all sit under units, and then houses is just a freestanding house? Because it's kind of not fair when you're comparing townhouse. They should have an allowance for townhouses here, because that's probably a little bit more common now when we're seeing apartments used to get approved quite significantly, and now they're probably not getting as approved as much. So bit of amalgamation of data there is not really reflecting those different sort of entry points into the markets, being housing, townhouses, flats and units, and then high-rise apartments. The year to January saw further divergence between aggregate credit growth for investors and owner-occupiers. Portion of mortgages originated on interest-only terms, so we saw a significant decrease, sort of 2016 there, down to 13.9% on interest-only terms. 13%, 14% of loans are happening on interest-only terms, which is really interesting because interest-only, it's probably investors not being in the market, but interest-only is, pretty key for investors. It sort of significantly reduces that monthly repayment on their mortgage, so really interesting there. Annual change in aggregate credit growth, so owner-occupiers is sort of sitting at 5%. Annual change, it's just changed by 5%, and then investors is negative now, negative 0.3%. So investors are really slowed down. Portion of loans settled at 80% LVR, 23%. So 23% of loans are settled with more than an 80% LVR, which means they don't have a 20% deposit, and that's kind of a stock standard thing now. Pretty interesting. That number's still pretty high. So obviously 23% of people are paying lenders mortgage insurance. Monthly values of new finance commitments. Owner occupiers up to 13.1 million, that must be. I don't know. Maybe billion. I don't know. Don't quote me on that. I'm seeing a little bit of a kick here in investors, which is interesting. Obviously, they take a little bit longer, but owner-occupiers have been the dominant driving force this time, trying to secure their principal place of residence, which is really interesting. Portion of new lending for investment housing, excluding refinances. So this is the decade average, 38.1%. Investors' share of new lending. So investors are only 28% of the lending of the investment space. So we're only 30% of the market, compared to 38%. So maybe we'll start to see that increase this year as prices start to drive up again. New home lending to owner-occupiers increased 1.6% in November 2019. Investor loans were 2.2% higher over the month. Interesting. This makes the third consecutive month of growth for the value of new investor finance. However, investors remain underrepresented in the market. Yeah, so it's, as they're saying, investors are slowly starting to come back into the market, but still very underrepresented. First home buyer participation fell in most states and territories over November, with the exception of Western Australia. So yeah, first home buyers there are somewhere around 30% of the market is new home owners coming in, first home buyers coming in. Stronger in Victoria at 30% and WA at 35%, and then sitting around the low 20 to mid 20s in all other states, apart from Northern Territory. But yeah, interesting. Maybe we'll start to see this number come up with a first home loan deposit scheme, which will be pretty interesting. So see how we go there. Investor participation is still below the series average in every stage, but is stabilizing in some areas. So yeah, as we saw before, investors are still pretty low in New South Wales. They're the most dominant, which is probably true, at 32%. All the other states are sort of, you know, between 20 and 30, mid-20s. WA, people aren't investing a lot in. But yeah, ACT is stronger than Victoria, which is quite interesting to see. So a couple of investors going to Victoria. Very interesting. Sorry, going to ACT over Victoria. The average 3-year fixed investor rate came down 4 basis points in January, while owner-occupier rates held steady. So average 3-year fix came down. So what the banks are trying to do is encourage investors to come back in, while owner-occupier rates are still steady. So that's interesting because we've seen owner-occupier sort of much stronger in borrowing money where investors haven't really come back in. So maybe it is the banks trying to carrot investors to start lending again. So 3-year fixed variable is at 4.8%. So this has come down significantly. Standard variable mortgage rates over time. Yeah. So yeah, you know, we're at the lowest point in time right now for standard variable mortgage rates at 4.8%. So if you're telling me it's, you know, money's expensive or it's hard to get in or it's too expensive or housing affordability, you know, just look at that graph and it's telling you that it's the lowest it's ever been at any point in time. Obviously a lot goes into housing affordability, but it's pretty cheap to borrow money at the moment. Average mortgage rate by product, January 2020. The lowest we'll see is the 3-year fixed owner occupied at 3.1%. Maybe we'll see a 2 in front of that at some point this year, depending if the cash rate does come down. And then the most expensive being the variable standard for investors at 5.38%, which is quite interesting. Both my loans are sitting around 3.7 to 3.8%. So obviously variable discounted. Pretty interesting. Owner occupier versus investor. Yeah, so the investor premium here is 58 basis points. You're paying 58 points of a percent more for being an investor. I don't know why they do that. If you know why they do it, leave it down below. Obviously it's to make more money, but it seems pretty silly to me. And that's it, guys. So let's just check there's nothing else in here. No. So thanks for watching again. Really appreciate it. Leave some feedback down below. Let me know what you think. Let me know if you want me to continue to do this throughout the year. There's a couple of other really good chart parks out there, like the RBA. There's the Heron Todd White. There's the Oliver Hume. I plan to do an Oliver Hume one, but that only releases every quarter. I keep checking their website and they've only got September quarter for last year, so I'm planning to do that. But yeah, if there's any other reports that you guys want me to cover or go over or spread my thoughts about and want me to continue to do this, please leave it down in the description below because it really encourages me to keep making content for you guys. So yeah, if you want to keep watching these as well, make sure you subscribe, hit the notification bell so you don't miss any of the videos coming up. And thanks again for watching, and until next time, happy house hunting.